Hello everyone, welcome back to our YouTube channel AQIB TJ. What if I told you that rising prices aren't just about supply and demand, but something much deeper happening behind the scenes? Every time you go to the grocery store, fill up your gas tank, or pay rent, it feels like everything is getting more expensive. Most people blame inflation, supply chain issues, or even corporate greed. And while those play a role, they're not the full story. The real, hidden driver behind rising prices is money creation. In simple terms, when more money is pumped into the economy without a matching increase in goods and services, each dollar becomes less valuable. This doesn't happen overnight, but over time, it quietly pushes prices higher. Think about it like this: if everyone suddenly had double the money, but the same number of products existed, sellers would naturally raise prices. Why? Because demand increases, but supply doesn't. This is exactly what can happen when central banks expand the money supply, often during crises. For example, during economic downturns, governments and central banks inject trillions of dollars into the system to keep things running. It helps in the short term, but long term, it can lead to persistent inflation. But here's where it gets even more interesting. That new money doesn't reach everyone equally. It often enters the economy through banks, corporations, and financial markets first. This means asset prices, like stocks and real estate, rise before everyday wages do. By the time the average person feels the impact, prices have already gone up, but incomes haven't kept pace. This creates a silent squeeze on the middle and lower classes. Another hidden factor? Expectations. When businesses expect prices to rise, they increase prices preemptively. Workers then demand higher wages, which pushes costs even higher. This creates a cycle that feeds itself. But maintaining that system often requires keeping money flowing and interest rates managed in a way that encourages more spending. The result is a cycle where creating more money becomes necessary just to keep the system stable, and that cycle naturally puts upward pressure on prices. So rising costs aren't just accidents or temporary disruptions. They're part of a deeper feedback loop between money creation, debt, and economic growth. Once you see that loop, you realize something important. Inflation isn't just an occasional crisis, it's often a long-term feature of the system itself. And understanding that doesn't just change how you see prices, it changes how you see the entire economy. Subscribe to our channel for more details.